Talen Energy Corporation, the nuclear-to-AI infrastructure company, anchored by the 2.5 gigawatt Susquehanna nuclear plant and an $18 billion Amazon AWS power purchase agreement.
Q1 2026 adjusted EBITDA $473 million, more than double year over year. Free cash flow quadrupled. Talen transformed from bankruptcy to the premier nuclear play in the AI infrastructure boom.
Talen Energy was spun out of PPL Corporation in 2015 with approximately 13 gigawatts of power generation across the eastern U.S., including the 2.5 gigawatt Susquehanna nuclear plant in Pennsylvania.
Commodity prices and debt drove Talen into Chapter 11 in 2022. The company emerged in June 2023 under CEO Mac McFarland and immediately signed the deal that changed everything.
The Amazon AWS nuclear PPA delivers up to 1,920 megawatts from Susquehanna over 17 years, an $18 billion revenue stream no competitor can replicate.
Nuclear generation from Susquehanna drives approximately 50% of revenue, pure baseload, carbon-free, and contracted at premium rates through the AWS PPA and PJM capacity markets.
Natural gas combined cycle plants and PJM capacity market payments generate 40% of revenue. The Freedom and Guernsey gas plant acquisitions, closed Q4 2025, expanded the fleet and earnings base.
Q1 2026 adjusted EBITDA $473 million, up more than 100% year over year. Adjusted free cash flow $350 million, 4 times the prior year's level.
FY 2026 EBITDA guidance raised to $1.75 to $2.05 billion, reflecting the PJM capacity ramp, the AWS nuclear PPA, and Freedom and Guernsey contributions.
Constellation Energy holds the largest U.S. nuclear fleet and has its own direct AI PPA strategy, an established operator with higher credit quality and more diversified nuclear assets than Talen.
Vistra Energy is the other high-growth independent power producer benefiting from AI power demand, diversified across nuclear, natural gas, and battery storage with a larger EBITDA base than Talen.
Talen's uniqueness is its AWS PPA structure, a direct front-of-meter nuclear power agreement delivering carbon-free gigawatts to a hyperscaler at contracted rates. No other independent power producer has replicated this model.
Susquehanna Steam Electric Station sits in Berwick, Pennsylvania, a 2-unit nuclear plant delivering power directly to an Amazon AWS data center campus nearby through the landmark front-of-meter power agreement.
Talen's gas fleet spans Pennsylvania, New Jersey, Maryland, and Texas. The data center power build-out is reshaping PJM capacity pricing, and Talen is positioned at the center of it.
Mac McFarland became CEO of Talen in May 2023, bringing 30 years of power experience from Exelon, Energy Future Holdings, and GenOn, a licensed professional engineer with MIT nuclear training.
McFarland holds a civil engineering degree from Virginia Tech and an MBA from Delaware. He completed MIT's Reactor Technology course and serves on the Nuclear Energy Institute board.
Talen Energy, the nuclear-to-AI infrastructure company, anchored by the 2.5 gigawatt Susquehanna nuclear plant and an $18 billion Amazon AWS power purchase agreement delivering carbon-free baseload electricity over 17 years.
Q1 2026, adjusted EBITDA $473 million, more than doubling year over year. Free cash flow 4 times higher at $350 million. FY 2026 guidance raised to $1.75 to $2.05 billion adjusted EBITDA.
A nuclear plant in Pennsylvania powers Amazon's AI data centers. The company that owns it emerged from bankruptcy 2 years ago. Talen Energy just reported Q1 2026. EBITDA more than doubled, free cash flow quadrupled, EPS beat. This is the cleanest nuclear AI power story in public markets. This is Charged Alpha.
I am Lana, ticker TLN, post-bankruptcy, nuclear-anchored, $18 billion Amazon contract running to 2042. Let's go.
Talen Energy emerged from Chapter 11 in May 2023. What came out was an independent power producer built around the 2.2 gigawatt Susquehanna nuclear station in Pennsylvania, one of the largest nuclear plants in the country, operating in PJM, the world's largest wholesale power market. Adjacent to the plant sits the Cumulus Data Campus, a hyperscale data center facility physically connected to the nuclear station. Talen sold that campus to AWS for $650 million, then signed a 17-year, 1,920 megawatt power purchase agreement to supply it with nuclear electricity through 2042.
Since emergence, Talen has aggressively scaled. The Freedom and Guernsey combined cycle gas plant acquisitions closed in November 2025, adding 2.8 gigawatts of PJM capacity. Total fleet is now 13.1 gigawatts of nuclear and gas. The Cornerstone acquisition, another 2.5 gigawatts across Indiana and Ohio, is expected to close in the second half of 2026. Talen went from a distressed single-plant nuclear operator to a scaled PJM power platform in 18 months.
Q1 2026 results: revenue of $1.129 billion, up 189% year-over-year, driven by the Freedom and Guernsey acquisitions and higher spark spreads. The Street estimated $1 billion. Talen beat by 11%. Adjusted EBITDA of $473 million, more than doubling year-over-year. Adjusted free cash flow of $350 million, a fourfold increase. GAAP net income was $63 million. EPS $5.55 versus $5.28 estimated, a 5% beat.
Generation volumes reached 16 terawatt-hours, a 55% fleet-wide capacity factor. The Susquehanna nuclear station delivered the majority of that output at effectively zero marginal cost. Nuclear economics are compelling. Once the fuel is loaded and the plant is running, each additional megawatt-hour of output drops directly to EBITDA with minimal incremental cost. Susquehanna running at high capacity factor is the single most important driver of Talen's margin structure.
The AWS PPA is ramping in 120 megawatt increments toward the full 1920 megawatt commitment by no later than 2032. Management targets 35% long-term contracted gross margin at full ramp, with a strategic goal of 50% through additional 1 gigawatt hyperscaler contracts. Every contracted megawatt reduces Talen's exposure to merchant power price cycles. The transformation from merchant to contracted is the re-rating catalyst.
Balance sheet: $1 billion in unrestricted cash, $1.9 billion in total available liquidity. In April 2026, Talen issued $4 billion in senior unsecured notes to pre-finance the Cornerstone acquisition and retire higher-cost secured notes, reducing annual interest expense by over $40 million. Forecasted net leverage is 3.1 times for full year 2026. Full year guidance reaffirmed. Adjusted EBITDA $1.75 to $2.05 billion. Adjusted free cash flow $980 million to $1.18 billion, both excluding Cornerstone contribution.
The quarterly revenue trend tells the acquisition story. $390 million in Q1 2025, $520 in Q2, $680 in Q3, $980 in Q4, now $1.13 billion in Q1 2026. EPS over those same quarters: $120, $285, $440, $390, $555. The step change from a narrow nuclear operator to a diversified PJM platform is fully visible in those numbers.
Mac McFarland has been CEO since Talen's bankruptcy emergence in May 2023. He architected the Cumulus Data Campus sale to AWS, the landmark nuclear PPA, and the acquisition strategy that more than doubled fleet capacity in 18 months. The Street views McFarland as the architect of the nuclear AI data center thesis. He saw the intersection of nuclear scarcity and hyperscaler demand early and moved decisively.
The Street thesis on Talen is a nuclear scarcity argument. New nuclear plants face 15 to 20-year construction horizons, if regulatory approval comes at all. The existing fleet is fixed. Meanwhile, AI data center electricity demand is growing 15 to 20% annually. The intersection of irreplaceable nuclear supply and exponentially growing AI demand is the most structural dynamic in power markets this decade. Susquehanna sits directly at that intersection in the most valuable grid geography, PJM, home to the densest AI data center corridor in North America.
The comparison the Street makes most frequently is Constellation Energy, the pure-play nuclear operator anchored by the Microsoft 15-year PPA. Constellation commands roughly 35 times forward earnings. Talen at 14 times forward earnings is a significant discount, attributed to post-bankruptcy seasoning, higher leverage, and AWS PPA still in early ramp versus Constellation's more developed contracted portfolio. As Talen's contracted revenue mix grows and net leverage compresses toward 2x, the multiple gap narrows. That convergence is the TLN re-rating thesis.
21 analysts cover Talen. Consensus is buy, 16 buys, 4 holds, 1 sell. Average price target $420, roughly 9% upside from the pre-earnings close of $384. The analyst debate is less about the nuclear AI thesis and more about pace of AWS PPA ramp, cornerstone execution, and net leverage trajectory toward the 2.0 times management target. Goldman upgraded to buy in January, Morgan Stanley upgraded to overweight in March, Wells Fargo in February.
On valuation, price to forward earnings of 14 times on the consensus $29 EPS estimate for full year 2026 is the most meaningful multiple for TLN. The EV to EBITDA of 12.5 times compares to Constellation at roughly 18 times and Vistra at roughly 15 times. Talen's discount reflects both leverage and the shorter public market history as a post-bankruptcy equity. As the company seasons and leverage compresses, the valuation discount should systematically narrow.
The bull case has 3 pillars. First, nuclear scarcity. Susquehanna cannot be replicated on any practical timeline. 2.2 gigawatts of carbon-free, round-the-clock baseload generation in PJM is irreplaceable infrastructure. No new nuclear plant will compete with Susquehanna for the life of the AWS agreement. Second, AWS locked in at premium pricing. The $18 billion contract with the most creditworthy hyperscaler in the world through 2042 is utility-grade cash flow that allows institutional investors to underwrite Talen at a structurally lower cost of capital.
Third pillar, the clean energy premium is real and growing. Tech companies with net zero commitments need 24/7 carbon-free electricity, not renewable energy certificates or intermittent solar. Nuclear is the only source that provides that at gigawatt scale. Constellation's multiple proves the market pays up for nuclear clean energy contracts. Every incremental megawatt-hour Talen delivers to AWS at contracted nuclear pricing deepens the re-rating case. Bulls argue TLN at 14 times forward earnings with this asset base, and this counterparty is the deepest value in the nuclear AI trade.
3 bear risks. First, single-plant nuclear concentration. Susquehanna is the core asset. An unplanned extended outage, a safety event, or an NRC regulatory action against one plant creates outsized earnings impact with no diversified nuclear fleet as a buffer. Constellation operates 20-plus plants. Talen owns 1 nuclear station. That concentration is both the source of the premium and the source of the tail risk.
Second bear risk, debt load. The April 2026 $4 billion unsecured note offering is necessary to fund Cornerstone, but gross leverage is now elevated. Net leverage at 3.1 times is manageable if EBITDA grows toward $2 billion, but the margin for error is narrow. If PJM power prices soften or a nuclear outage hits revenue, leverage widens at the wrong time. Third bear risk, AWS PPA ramp timeline. Full 1920 megawatt delivery arrives no earlier than 2032. Merchant price exposure remains the dominant earnings risk for the next 6 years.
The longer-form bear case frames Talen as a levered play on a single nuclear plant, with a hyperscaler PPA that takes years to reach full volume, in a merchant power market that can reprice sharply in either direction. If nuclear power prices normalize as capacity additions catch up to AI demand, or if Susquehanna experiences a multi-month outage, the leverage magnifies the downside with no diversified generation base to offset.
Constellation Energy is the primary comparison. Pure nuclear fleet, Microsoft PPA anchor, 35 times forward earnings. CEG's premium reflects a 20-plant diversified nuclear fleet, investment-grade balance sheet, and longer track record of contracted revenue. Talen trades at a 14 times discount reflecting post-bankruptcy seasoning, higher leverage, and AWS PPA early in ramp. The TLN to CEG multiple convergence trade is contingent on leverage compression and PPA volume growth, both of which are trackable on a quarterly basis.
Vistra is the closest operational peer, nuclear plus gas, in PJM and ERCOT, with the Meta PPA as hyperscaler anchor. Vistra at 50 times trailing earnings reflects dominant market position and contracted revenue build, but Vistra's nuclear exposure is Comanche Peak in Texas. Talen's Susquehanna sits in PJM, where data center density is highest. That geographic differentiation matters when hyperscalers are buying power in the specific market where they are building data centers. NRG Energy at 18 times, gas-heavy, no major hyperscaler PPA, represents the floor for competitive power valuation absent the nuclear AI premium.
Options activity heading into Q1 showed elevated implied volatility consistent with a post-bankruptcy re-rating story. Put-call ratio of 0.72 reflects institutional bullish lean. Call open interest concentrated between 380 and 420, bracketing current price and analyst consensus target. An implied move of approximately 10% signals that institutional investors are treating TLN as a growth equity with nuclear infrastructure characteristics, not a classic regulated utility. The post-earnings trading pattern and whether TLN holds above pre-earnings levels will inform whether the current multiple represents the floor or the ceiling of this re-rating cycle.
On insider activity, Talen's post-bankruptcy equity structure concentrates management compensation in emergence-linked equity grants. CEO McFarland's financial interest is directly tied to long-term stock appreciation through reorganization equity. The absence of open market selling is consistent with high insider conviction and regulatory lockup considerations, not disinterest. Institutional ownership has been expanding as the nuclear AI thesis gained traction through 2025 and into 2026. Broadening the shareholder base beyond traditional utility funds toward infrastructure and tech-adjacent allocators. Talen Energy is a leveraged bet on nuclear power meeting AI data center demand. The Q1 2026 beat confirms the bull path is tracking. 3 numbers to watch each quarter: adjusted EBITDA versus the full-year guide, AWS megawatt delivery updates, and net leverage toward 2 times. Those metrics tell the re-rating story.
Nuclear scarcity, AWS locked in, clean energy at a premium. The risk is concentration and leverage. The reward is a constellation-level re-rating on a post-bankruptcy equity still at a deep discount.
This episode is for educational and entertainment purposes only. Nothing discussed constitutes financial advice or a recommendation to buy or sell any security. Charged Alpha may hold positions in companies discussed. Always do your own research and consult a qualified financial professional before making any investment decisions. Past performance does not guarantee future results. Thank you for listening.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.